YouTube live to Milan, please? Send them everything. Thanks. I already did. We're live. All right. Welcome everyone to our high production, super duper amazing show. We're gonna take a look at the markets, and joining me today are some of our traders, Alexandra, Bashar, Anthony. So thank you guys for joining, and we're gonna kind of just talk what we're seeing in the markets, because volatility is hitting the markets. So, and anybody who's watching on YouTube and or 1 second, live and or Discord. 1 second, guys, can you message me the link to send me the link, because I need to put it in a few channels. Thanks. All right. Give us everybody a second to join, and we can start.
Are we live, or is it just us for the moment?
I think it's live. Yeah.
Okay.
Let's see. Alrighty. So, welcome everyone. We're gonna do this. This is finally we are doing it live instead of pre-recorded. So I want to thank everyone for giving us their time, and we're gonna just briefly take a look at what I see in the markets, and maybe Bashar, Alexandra, Anthony can share a few things as well, if they want to. And so anyway, welcome everyone. Hopefully we'll start doing this on a weekly basis for more users. You can ask questions on YouTube or Discord, and next time we'll do it as well. So if you want to type something in, type something in. If you want something specific to take a look at. So me personally, I just traded gold twice this week. My trades, it was basic fib trading. I traded once off here, and I closed it earlier, and I scalped a little bit from here to here, and that was pretty much it. For once I saw this candle turn around, I entered on the buy here, and I exited somewhere here. I didn't wait because of the previous highs here. Basically, that was trade number one, and the trade number two. Oh, it's muted. Oh shit, that's right. Sorry guys. All right. What about now? All right, everyone. Welcome again to the thing. All right, so there we go. Better. All right. All right, what about now? Can you still hear me? I can't tell. I'll have to stop, and then it doesn't matter. All right, that's so good. All right, just double check one more time for YouTube. Can you guys hear me? Can somebody say yes, no?
Yeah, I can hear.
Yes. All right, awesome. All right, guys. So let me actually see. I actually posted these trades, exactly what we traded. So I bought 405.51. So I bought, okay, so I bought first once here, exited here, and then I rebought here and exited again on the over the highs here. That was my two trades for the week. For now, though, I see it's consolidating, so I don't want to touch any. It's for me, there's no entry for now. So at the end of the day, today we also had the NFP come out for October, which was strong. So markets actually dipped, as you can see, once the news release hit the markets, for the reason because people are betting that December rate hike is less likely to happen because of the very strong job reports, right? We were expecting like 40,000. I think it would be, the estimate was 40,000, and we crushed it with 150,000 jobs added. So markets perceived it as the December hike is not happening, but I think it's bullshit. I think this is an overreaction. I think the Trump is still going to push for a rate hike, and he's putting pressure on Powell and then the rest of the Federal Reserve board members, and obviously it's de facto already that the Powell will be replaced by Trump's yes man, and the Trump's yes man will be lowering interest rates. So again, let's take a look what the yields are doing because it's important. So as you can see, both yields for 10-year, 30-year, they're lower after the release. Why? Well, because the markets are anticipating that even though the strong jobs report came in, it's not going to affect anything long term, and Trump will get his wish essentially. So
how do you correlate?
Yeah,
I'm sorry, but how do you correlate like bonds and yields with gold? Because I've
okay,
seen you
so
you checked it so many times.
yeah. So what I'm looking for right now is which one is the bullshit artist, right? So the market sold off on the news. They basically took the headlines and algos basically sold this off. They saw the headline that it was a beat, so less likely. They assume that it's less likely that the Fed will be cutting interest rates. And however, to double check that what the actual market is thinking on the bond market is thinking, they think that that's bullshit. I think they still think that the Trump will get his wish and the December hikes are happening. That's why the bond market and the yields. So the people are buying bonds, and yield is inversely correlated. So the higher the bond price, the lower the yield. All right, so people are buying bonds, and hence the yield is dropping. So they're saying that that the Fed will be cutting interest rates. Essentially, they're pricing it in, and the people that are wrong are the algos trading the equities right now. So they're in the wrong, because the markets, the major participants who trade debt instruments, which are bonds, notes, and etc., they're saying that no, the December hike is still happening. So one of these markets is incorrect, and I think that's the equities will correct maybe tomorrow or next week. They will actually see coming in. So same thing with gold. Gold is actually with gold it's a little different. So the lower the yield, as the yield comes down, the price of the dollar should be coming down as well. Why? So for example, if your grandma left you $100 million and you have a choice where to put it, would you put it in a bank in the United States which pays you 5%, or a bank in Europe which pays you 10%, and everything else equal for the sake of the argument, right? You're going to put it in where it's 10%. So when we go, so the European bank 10%, the US bank 5%, let's say, right, for the simplicity of the argument. And when the bank in the United States says we're now going to drop from 5% to even lower to 4.5%, more money will flow into the euro than into the United States, right? So this is how rate differentials play a role in currency markets, gold, and pricing of all the instruments. Because large institutional investors, they're chasing yield, right? So when the yield in one place is dropping and it remains the same or increases in the other place, then the flow of money goes to where the higher yield is. And that's why debt instruments and yields are important to watch, because all the professional traders, they're not just watching one instrument and I make this say, oh, there's a hammer candle, this is a hammer, let me sell. Okay, that's an idiotic way of trading. That's that's level 1, right? And they're out of 10 levels. That's a very simple way of trading. Just because you see some kind of one factor that is showing you that this might potentially be a sell, it's not enough. So by watching, so my trading system is very not simple, but it's that I establish what's going on in the world by watching fundamentals, right? So we understand that the expectations for the rate hike are coming into the United States. So naturally, the value of the dollar is going to be decreasing because less people will be buying dollars or United States debt versus other countries' debts, right? So when you understand the macro environment so I'll give you a better example. For example, I'll give you what happened. So remember when during COVID, so let me show you. So this is when COVID hit, United States started to raise interest rates aggressively. So this is the euro dollar. The euro was remaining at 0%, while United States was coming into 5%, 6%, 7%, whatever it was. So the value of the euro was coming down against the US dollar because of US would be paying a lot more on their debt instruments, where you can park your money, and instead of making 0%, you will be making 5%, right? So obviously money got out of Eurozone and went into the US, and that's why you got this price action. It was a one-way traffic. So understanding that, you don't need, just based on that, you can make trades. Same thing with gold. Gold actually started pumping because of so nothing was happening. Then the United States lowering interest rates, and with that anticipation, also because of the lower interest rates, the anticipation for inflation went up. So as a hedge against inflation, price of gold skyrocketed in the last year, right? So or two, whatever. All right. So we were consolidating, doing nothing. This is COVID time. We're doing nothing, and all of a sudden we see this spike because, again, rate anticipation. If we lower interest rates, and I didn't want to turn this into the whole lecture about this, but if we lower interest rates, that means that there will be more easy access to money. It stimulates the economy. All right. So the price of stocks went up. This price of gold went up. It's because of inflation. So again, the asset prices, now you have, let's say you have 100 shares you have 100 pie pieces, right? And $100. All of a sudden you have $150 chasing the same 100 pieces of the same pie. So the price of the pie of these pieces goes up because of the inflation. That's simply it. That's why rich get richer, because they always sit in the asset classes. They don't sit in cash. Okay. Cash is trash, as they say, for a reason, because inflation basically every year it decreases the purchasing power of your money, right? So anyway, there's a lot of questions coming in, guys. I will have to address them a bit later. All right. Anyway, so right now we're seeing that the interest rates are still priced in to this is the yield to start going down, and there's not a lot of action, but it's enough. At least today we went down. So one of the asset classes is lying, and I think it's the equities. Okay, so as the rates drop, more businesses will have access to capital. When you have more access to cheaper capital, you can borrow money and do more business. That's why the stock market has been going up, despite the shitty economy and everything else. The anticipation, because the businesses will have cheaper capital, they can invest and they can buy more goods and services, et cetera, et cetera. So the flow of money all around the economy, it accelerates, and thus the expansion of the economy. And as you know, stock market is the pricing mechanism for the future of those companies, right? So as we see that they will have more access to the capital, they can do more business, they can make more profits, and that's why you want to buy the stock, because in a year where their profits are higher, et cetera, et cetera, et cetera, right? So that's the chain of the event. Anyway, they don't want to change, make it into this whole lecture about this. Guys, what about you, Bashar, or Alexandra, or Anthony? What you guys trade? What have you traded this week, or what what was anything interesting or not interesting? And Alexandra, why don't you start?
Okay, ladies first. I like this. So I've been taking it very slow this week. Last weekend I spent some time resetting my charts and resetting all of the indicators I had. Because for those who don't know, I trade on very small time frames from 1 minute to 15 minutes. And I'd like being in trade for at max an hour. And I had obviously different charts for the different time frames, and some had different indicators and some were not always set up the same way. So I was seeing things on one time frame, but it was not aligning on others. So I spent the weekend just sort of resetting everything to have the same information across the different time frames. So I've been taking it very slow this week, just getting used to the new layouts, and also
Okay.
at the same time practicing discipline because I had a tendency of over trading. So I've just been paper trading and had a target of 2,000 per day, which I've met by taking very concise trades and just getting used to the new indicators. So a set of different trades from Monday, Tuesday, Thursday, and Wednesday, and today, with the daily target of 2,000, and I've met those with minimal losses every time. So I'm quite happy about that. And but yeah, still getting used to the new layout of my charts and how I just look at them and how I analyze the market, and just practicing also the discipline and the patience. And it's good, yeah, doing that with a bit of paper trading, which has been good.
All right. Well, I think everybody kind of makes nothing stays static in the markets, right? So because volatility changes, markets change. So sometimes I trade more with swing trading. Sometimes I do more active trading. When markets moving super fast, I can hop on a lower time frames, et cetera, et cetera, or vice versa. Sometimes it's safer to, when the markets go ape shit crazy, it's best to pull out a little bit so you don't get run over. And because again, you cannot have the same stop losses when the markets are slow and snooze fest. And then if something comes in and some kind of news come in and environment changes, you have to also change your environment. So that's nothing. There's nothing wrong with making adjustments. It's like dancing. You always have to, you have to feel the dance with the rhythm. If the rhythm changes, you can be doing something that is not there anymore, right? So
Exactly.
yeah, so that's a pretty normal thing to do. And all right, Bashar or Anthony, what about you guys?
Well, November, it wasn't the best trading for me because you can see gold has been consolidating basically from 4,100 to 4,050. And I admit I'm not really good at trading consolidation. I prefer like trending markets. So I'm managing my risk very responsibly. Okay, I know I'm in drawdown, but I know I will get out of it because I've been in this position before. I'm risking very small amounts now, hoping like the conditions will get better later on. I tried to sell today like two times and I lost. Finally, in the later hours of a New York session, I managed and I won that trade. But yeah, I
Okay.
don't like the conditions these days, honestly.
No,
Yes,
that's yeah, no, that's fine. And again, there's no system that works in every market environment. You make your and there's no such thing as just making a stable amount every month, blah blah blah. Sometimes you have you make, obviously, if you I prefer I also prefer trending markets because it's obviously easier, faster,
because yeah,
right?
in consolidation, they would tell you, okay, you can trade the range, like sell the top, buy the bottom. But I don't know how to do it, honestly, and
I see.
I don't like to do it.
I usually prefer, but you did something smart. You see that the environment has changed, and you've taken off a little bit the foot off the gas. So instead of trading one full size, like let's say one unit, you're going to be trading whatever half, right? That's until market gets back to your trading.
Yeah,
optimal
basically
trading
I'm
environment.
trading 0.25 lots.
Yeah.
So
And that's actually very smart. Again, when most traders, when they most unprofessional traders, what they do is they start losing. So then okay, now I got a revenge trade. Now I got to double down, triple down, and then all that leads to sometimes they make their money back, but at some point, what's going to happen is they're going to just blow up, because they triple down, then quadruple down. Now they had 3-4 losses in a row that are getting bigger, bigger, and bigger. All of a sudden, you take a look at the account and you're down 30,
you know what
40,
they say,
50%.
double the lot and opposite direction. So
Yeah.
it doesn't work.
So exactly. So that takes guts and discipline. And most people are saying, "Oh, why That's actually a very mature way of approaching trading markets. Because otherwise, you're not managing risk. You're just mismanaging
So
your
because
ego.
I risk 0.5% every day. So in my head, it would take me like I think 20 losing trades in a row to blow the account. If
Right.
that happens, then it's fine. Then it's my fault.
But otherwise, you have enough firepower to withstand the heat and go through the losing streaks, because most traders, they this is the let's say they're not looking at trading as a series of trades. Let's say in a month you take whatever 100 trades, right? Some are wins, some are losses, win loss, win loss, win loss, win loss, right? And people for some reason will concentrate on these losers without understanding that all you have to do is just wait out this series out to get back to the winning. Once you start getting back to the winning side, that's when you return back your normal position size, because all you have to do is just survive the drawdown periods, and markets never stay the same. So they go from one trading environment to the next, to next, to next, to next. So if you are more of a trend trader, and now markets are consolidating, so you take a little off the gas, because you know when the markets will start continuing, obviously. So
you need to preserve your capital.
Yeah, you need to preserve your capital. So that's if you guys only can learn one thing today, that's it. You get to fight another day. And speaking of fighting, we got Anthony over here who actually likes to do that. So, and is good at it. So I know you train a lot on martial arts. So how was your week, or what have you been up to?
Man, it's fighting. Speaking of, it's been pretty challenging for me too as well. However, I've learned when the markets start consolidating, I have to change up my entire style. I can't trade like I would be trading in a trend style in a consolidated market. So I've learned that when the markets consolidate, I trade momentum. Big fan of it. Wherever the market's going, whatever candlestick has the most volatility, whatever's popping during that hour, typically I'll catch the trend, I'll catch the wave, and then I'll just hit my averages, which would be 10 to 30 pips. And I would say 2 days ago, I caught a 40 pip run. I was actually hesitant on putting this trade in because it was during the time that I typically don't trade. And I actually was like up like 15 pips, and then I went to sleep like the whole night. And then I woke up the next morning and I said, oh shit, it hit my take profit, but I didn't expect it to. But I was already up like 15. Yeah, I was already up like 15 pips, and instead of me taking like half of it out, I just moved my stop loss to my average. That's what I typically do. Like, I like to get in a position where, and this is one of the advantages of like the bigger time frames, you can get into a position and you can kind of hold, like the market's going to do what it's going to do in a 4-hour time frame, but you're not going to sit there and watch it. You know what I mean?
Right.
And sit there and watch it for 4 hours. Once you're in your position, just hold it. Because a lot of times, if you're in that position, depending on like the structure of the market, it's typically not going to reverse. But if it just so does, I'm going to hit my average. And I'm all about hitting averages. It's a numbers game. So throughout the week, I'll set my pip average. Like I'll try to hit anywhere between 75 to 100 pips, no matter my lots, no matter what. I try to hit my averages, because what I realized over time, when I'm constantly hitting my averages, I ask the question to myself, what kind of market was it? What kind of structure it was? And I'll, write down my notes, and then I'll get the note taken, and then I'll be able to revert back to it. So one of the strategies that I was able to revert back to was momentum. And I wrote this down in my notebook like 3-4 years ago. And then the markets were consolidating then, and a lot of my successful trades were momentum trades. So I was able to recall that, and I was struggling, like I said, for the past like 3-4 weeks, man. It's been crazy. But because I know the type of market that it's in, I know I only have to just take momentum trades. So I'll look for my position in the 4 hour or in the day, and wherever the momentum is going, that's where I'll jump in and catch it. So
that's I actually switch around a lot as well. Not a lot, but whenever the environment changes, you can change your you have different tools for different environments, right? So
exactly.
When you see whenever I personally prefer trending markets, but when I see that I'm not in a trending environment, I don't stick around. I'm not gonna stick around in the market. So I try to be as in and out, in and out, in and out.
Right.
Because otherwise, the chances of you getting chewed up are pretty substantial.
Yep.
Right?
Yep.
So I'm like that too. So whenever I see that we're no longer in the easy mode, so to speak, I try to be very nimble. So I take my quick rip and I fuck off.
Yep.
All my French, So because the less I'm exposed in the market, the less risk it is for me to getting stopped out or getting in trouble, right? So
that's his best, bro. It prevents overtrading, all of that stuff. I'm a big advocate of like less time I spend trading, the more successful. So, well, like I said, when I'm in my position and then I'm good like 10-15 pips and it's still like moving, I'll move my stop loss and then I'll just shut my computer and just set a take profit. If it hit it, it hit it. If it doesn't, then
whatever. Yeah. All right.
It's actually good to step away, because for example, today I was looking at the market. We have the dollar index ripping high. News came, I think it was positive for the dollar. So, but still gold is not moving. Like, okay, if you don't understand the market, it's better just don't trade the market.
Yep. But by the way, price is king. So meaning that if something comes out, some news comes out, and price is not kind of doing something else, that means usually you might just have to stay out of the market. Again, it's cheaper to be out of the markets than eat a stop loss. So it's better. It's not only when to trade. It's most of the time trading is all about when not to trade.
Yep. Yep.
So
because we know there's a big move coming. After all this consolidation, there has to be a big move.
Yep.
Exactly. And that's when we are gonna make. That's exactly when you're gonna start capitalizing on the move and make up for all the little stop outs and all the losses, all the headache. You just have to again live to fight another day and not blow up, essentially, right?
Yes.
So, all right. One more thing, and since I named this stream about Bitcoin and completely forgot to talk about Bitcoin, I'll take a look at Bitcoin because I'm being asked a lot of questions from the Bitcoin crowd. All right, so let's take a look at what's going on. So obviously we have way sub 100 now. We've broken 90,000. I think the last bastion of support before the wheels really start coming off are at 85,500. Why? So if you can, my screen is on. So we've been doing the hop step shit. So it's if it's not gonna stop at 85, essentially, I'm gonna take out the 75. It's probably gonna even head even lower than that. So this is probably if I was to scalp, I would look for a react. Again, nobody knows where it's going to go. And we as traders, it's not our job to be analysts and trade based off some guesstimate. Oh, maybe it'll stop here. Maybe I don't give a shit where it's going to stop. If it keeps going to zero, so be it. But if, for example, if I see a big level coming up, which is 85.50 or 85 or 500 rather, it's a 786. It's the last kind of major fib, and it coincides if you take a look at the weekly. And so let me just this. If you take a look at the weekly chart and use the order block theory from ICT or whatever, it's a confluence, right? Or previous support turn, now turn resistance. So we had a nice sell-off into this this area right here, right? So the top of these candles. So what I'm anticipating is very simple. I want to see kind of a reversal candle turnaround for a scalp. And by the way, look how if you take a look at the fibs, how technical each level had a response. There was a response on 38.2, was a response at 50, and zoom in. Response at 618, a little bit whatever. But for even at midpoint 702, you had a reversal, and you could have easily taken 1-to-1 here. So if I see a setup similar to this around here, that might be a nice little scalp or more. So that's kind of like the Bitcoin thing that I'm looking for. And the whole trading for me is again, I don't care if it goes up or down. I'm trading, I'm looking for volatility and the response to major key levels around those levels, right? So the major level is 75, the next, and after that it's 75,000. So if it keeps dropping, it keeps dropping, and I'm not going to be just leaving an order just because there's a big level. Most novice traders, they think, oh, the support resistance or order blocks, and they just blindly leave an order there. I don't leave an order there. I'm going to wait for a confirmation of a turnaround if I'm going to be kind of going against the trend here. All right, so a short-term trend, a medium-term trend, right? Because obviously we're still kind of well, we're not bullish anymore, but for the last 4 weeks we've been selling off. But we're coming into some key levels, and if Bitcoin is turned to turn around, it's around these two levels. At least, like I said, a temporary reaction. So, and this is the perfect example where I'm not going to stick around. I'm going to see a I'm looking at the weekly chart here, and I'm going to take a trade on an hourly or 15-minute, more likely an hour. If I see a candlestick, you know, a turnaround candlestick on an hour time frame, hammer candle with the follow through, then one kind of like it was here, right here. This is a 1-to-1 scalp, right? Same thing here, same thing here. All right. So this is, if I see a similar situation develop in this Bitcoin, I will take it up, but I'm not going to stick around. It's going to be 1-to-1. I'll take half off at 1-to-1, put a stop or break even. If it runs, it runs. If it doesn't, if I see it's starting to falter, I'll just close it, and that's it. You know, so that's my kind of like scalping strategy. All right, guys, it's been whatever 40 minutes. We like to keep it short and sweet, and don't want to take up all of your time. I really appreciate you guys all joining today. We're gonna do this next week, hopefully. Whoever wants to join, more than welcome to join again. We would appreciate it. And next week we'll maybe share some screens, this and that. And if you guys have any questions, the ones who are watching us on Discord and YouTube, we'll answer all your questions as well. All right, thank you all for coming. I really appreciate everyone. Bashar, Andrew, Anthony, thank you. Hopefully the remainder of you know, we hopefully the markets become a little more clearer. By the way, last thing to mention, the reason why there is also a little bit of less volatility in gold is because of the government shutdown. So a lot of news were not. There's no major news to move market one way or another. So that's why you basically see one day up, one day down, one this, that. Right. So once there's a little more clear picture with what's going on with the interest rates and everything else in the economy, I think we'll start moving more again. All right. So on that note, thank you all for coming. Hopefully we'll see you next week. And yeah, thank you all. Cheers.